Hi, I'm David Krohn at Property Masters Realty. Probably the question that we get asked most is where are home values going? Well, no one knows, but we can guess. Of all the properties that we sell, the ones that sell quickest are the starter homes, the single-family homes in nice areas priced under $500,000 and medium income areas priced under, say, $300,000. We put these on the market and they sell within a week within the current environment because there's just not a lot of inventory. So what that tells us is that segment of the market's probably bottomed out. A little bit more inventory could come in and the market could easily absorb it, be it investors or first-time home buyers. Investors are finding it attractive because for the most part they're priced at the level where if they buy them with a small down payment, they can rent them out and the properties at least break even. First-time home buyers are seeing home prices half of what they were 5 years ago, and the people that waited to get into the housing market are, they're picking up houses and they're very happy with what they're finding. So that segment of the market currently is actually going up in value. It may not continue to go up in value, but it certainly is stabilized. The upper end of the market, however, is a little bit different story. There's a lot of talk about how the prime loans, as they call them, are going to start coming back on the market, and the more inventory we have, the faster prices are going to start falling. So the main problem is there's a conforming loan rate limit, and when you get up to a property priced over $1 million, you have to put a huge down payment down to get the loan down to conforming levels. And there's very few jumbo loans available. So when you look at the payments on those higher end homes, they're astronomical. And prior, people were coming in, they'd have stated income loans, and they'd be able to just basically tell you how much they made. Now you have to document it on a tax return. A lot of the people that had documentable incomes have had pay cuts. People who were on commission, people who had bonuses. Those augmented their W-2s and made it so they could qualify for more loans. A higher loan amount. So now you need say a 45 to 49% debt to income ratio. So if you're looking at a $5,000 or $6,000 a month mortgage, you need to have like $15,000 to $20,000 a month in documentable income. Not a lot of people have that. Conversely, you got to have all cash. So there's a small number of buyers that are in that position. Once we start seeing a lot of the properties that they haven't been foreclosing on coming on the market, there's going to be a lot of supply, there's not going to be a lot of demand, and prices are going to adjust downward. So if you're waiting to buy a higher end home, you might want to wait a little longer and see what the market, see what happens. Prices probably aren't going to go up. They may stay flat. They're probably going to go down. You might be thanking yourself later if you wait.
She's immune to